So the investment framework that investors are now looking at is this investment world. It started on the 1st of July. It's very early days. You're going to start seeing a greater engagement and I guess chatting around this concept of what the significance is of the ESIC world. It's in place, it has bipartisan support, it's the new world for raising capital and it's the new investment framework for early stage companies. The question came about what the tax breaks look like for an investor. And I'm sure some of you guys potentially look at investment as well, and they're significant. We've built a tax saving estimator, so your parents, people who are looking to invest in your vehicle, could be eligible for these tax breaks. So I'd encourage you to refer them to this website. There's a bar here where you can look at what your proposed level of investment is as an investor. And you can play with this bar and say, look, I want to invest $100,000 in my venture that's been presented to me. And it will automatically work out what some of those tax benefits are. So there's a tool there, it's called the ESIC Tax Saving Predictor. And fill that questionnaire out if you're interested in looking at it from an investment point of view. But let's go specifically to that question. What are the tax breaks? They are significant. The first thing is an investor coming into one of your projects. Let's say you, I don't know, I'll take a case study. One of you might be interested in raising $1 million for the sake of the exercise on a valuation of whatever it is. Let's say $5 million just for the sake of the case study. What does that look like in terms of these investment benefits and the new investment framework that applies from the 1st of July? It looks like this. New capital must be issued. That's easy because you're issuing expansion capital. That's why you need the capital to grow and, I guess, develop your project into a sustainable business and to take it to that stage. That $1 million, provided it comes from a sophisticated investor, has the following tax benefits. A 20% non-refundable tax rebate. So a 20% non-refundable tax rebate. What does that mean? If you're a partner in a law firm earning a lot of money, or an accounting firm, and you have an income of $1 million and a tax liability of, say, $400,000, if you put $1 million into an ESIC, the tax office, once the certification process has gone through our hub procedure, the tax office will effectively give that investor a tax credit of $200,000. So their tax liability will go from being $400 to $200. You can immediately see a 20% after-tax reduction in the cost of investment. Does that make sense? The second benefit is a very significant capital gains tax leg up. If that $1 million investment by the partner in a law firm or an accounting firm turns into the next Google for the sake of it, and I hope it does for all of you, if that $1 million is worth, I don't know, $50 million, and those shares are sold within years 1 and 10, the capital gain, $50 million minus $1 million, would ordinarily be subject to capital gains tax in Australia, and a significant rate of tax would apply. As a consequence of ensuring that you're an ESIC at the time of the investment, that is all capital gains tax free and tax free. Significant benefit. So let's recap. A 20% non-refundable tax offset that can be carried forward indefinitely by the investor. A capital gains tax exemption on any gains made on the disposal of shares in your growth company. Yes, yeah.
Thank you so much.
Okay, thanks. Thanks everyone. Thank you.